Westpac, ANZ and National Australia Bank reported their full-year profits this week, with the sector under intense pressure in the mortgage lending market. National Australia Bank's the second largest bank after CBA. Its profits slid 8% to about $7 billion, pushed down by margin pressures. I caught up with its chief executive, Andrew Irvine.
Look, I think the economy has surprised on the upside. We've been talking the economy down for a while now, and yet employment levels continue to be robust. Unemployment is low, and inflation has proven to be stubborn. We'll see how things go. I think we're going to have a good Christmas, but households are budgeting hard and paddling hard to stay afloat. Our view is that we might get a rate cut in February or March. All depends on what happens to inflation in between now and then.
Yeah, what do you see as some of the big risks the economy's facing right now? Is inflation one of the biggest ones, or is it something else?
Nah, inflation is what all eyes are on. If that trimmed mean number can come within the RBA's limit, then I think we'll see that all-elusive rate cut come, which will be great relief for borrowers up and down the country.
How much of an X factor is this new president-elect Donald Trump? He obviously won't be inaugurated until next year, but we've seen quite a big shift on the markets overnight. How concerned are you with potential tariffs being added on to global goods? What might that do for us here in Australia?
Well, look, it's a historic election. I think he's the second president to win a second non-consecutive term in the history of America. Pretty remarkable. As you say, stock markets and the US dollar rose overnight. The expectation is Trump's going to be good for the domestic economy. He's going to reduce taxes. He's going to get rid of red tape. And the economy will grow faster under a Trump presidency. The question for us here in Australia is, does he enact the tariffs that he said he would? He has said publicly that he wants to have 60% tariffs on Chinese goods and 10% on everybody else. If he does do that, that will, I think, hurt the global economy and on the margin would be inflationary as well to the US economy, and there's therefore implications possibly for whether interest rates continue their downward trend there.
Yeah, do you think if it is inflationary, could that mean rates higher for longer in Australia as well?
Look, I don't think it's going to change the immediate outlook. So February or March, if interest rates come down, that's entirely dependent on domestic inflation and what happens to that trim mean number that the RBA governor is looking at. I think possibly later in the year into 2026, if US growth is much stronger than anticipated, and if US inflation is also stronger, that might mean that the Federal Reserve doesn't reduce rates as much as they otherwise have. And there's a possibility that that transmits to other economies in the Western world.
All right, looking at your profit results, you're Australia's biggest business lending bank. How has the business lending business been holding up for the past 12 months?
You know, businesses are still doing well. Business credit growth's been very strong. I think we finished up the year in our business division with 8% credit growth year over year. That's a great number. So businesses up and down the country are still choosing to invest in machinery, capital plant, and increase the size and scale of their businesses. And I think that's good for Australia and good for the Australian economy.
There are some pockets, though, that are struggling a little bit. Any sectors in particular?
I think the areas where we are seeing a bit of a challenge are in businesses that skew to the domestic economy and domestic consumption, particularly discretionary spending. As consumer budgets have tightened and people focus on mortgage payments and car payments, they're having to, choose where they spend their discretionary dollar. And that's had an impact on some businesses, particularly in Southeast Australia, that we're seeing. The other area is in some supply chain and some manufacturing sectors. We're seeing input costs continuing to rise, but businesses struggling more than they had in the past on passing those costs on to their customers.
And looking at the NAB's overall group results, arrears has jumped to 1.39% of all loans. I believe that could be the highest point since around 2020. What are the factors that are pushing arrears up?
It's just cash flow challenges, both amongst households as well as small and medium-sized businesses. To the large extent, those arrears and delinquencies haven't turned into impairments. So, housing prices are still strong, but people are struggling to pay the mortgage. In that instance, we encourage our customers to give us a call, and we're here to help them. Hardship requests peaked for us in about the June-July timeframe. Since then, they've plateaued, and they've actually started to come down. I think that's a promising sign that we might be at the toughest point in the economic cycle, and that there's light at the end of the tunnel.
Yeah, the home lending book, how much pressure has that been under from a competitive standpoint from the other three banks?
Well, it's not just the other three banks. I think the competitive pressure has been broad-based, yeah. Earlier this year, pricing in home lending was particularly intense. And so we made a decision at our bank to kind of step away from that a little bit. Thankfully, the back half of the year has seen a more stable environment. And so, we've been on the public record that we're back in and looking to grow our home loan business in line with system.
And how much investment have you put into simplifying processes with loan applications and using new technology and things like artificial intelligence?
No, we're really pushing into that area. As a bank, we're all about making things easier and simpler for our customers. We're now saying yes to home loans in the same day, sometimes within hours, which is unheard of for us compared to where we would have been 4 or 5 years ago. And we're going to continue to improve the processes so that it's easier and simpler for our customers as well as for our bankers.
You've recently used some consultants to refresh the strategy at NAB. You've got the goal to be the most customer-centric company in Australia and New Zealand. Just explain what that means. Is that just a wishy-washy term, or is that the real deal?
Look, many companies say that they want to look after their customers. At NAB, we really mean it. We want our customers to be delighted by their banking experience with us, and we're going to work really, really hard to ensure that happens much more frequently going forward. Yes, we've set the ambition, but the ambition alone is not enough. We need to also ensure that our operating systems and how we manage the company are consistent with that ambition in terms of how we get feedback from our customers, how we listen and act upon their feedback, and how we make investment decisions. And they're all things that we're looking at changing how we run the company as we move forward into next year.
You took over as CEO in April. How's the transition been to being chief executive and running the second largest bank on the stock market in Australia?
Look, it's a really incredible opportunity for me personally, and it's a huge responsibility for me to represent nearly 40,000 colleagues who come into work every day working hard to look after our customers. We have 10 million consumer customers, over 1 million business customers, and we really want to enable them to live their lives, build their businesses, and be their partners on their journey.
And what do you think the key will be next year? Will it be a rate cut in February? Is that really going to kick things off for helping out customers and helping out the overall economy here in Australia?
Look, we see the tax cuts of help that were announced by the government earlier this year. If we get 1 or 2 interest rate cuts over next year, we think 2025 is going to be a little bit easier than 2024 has been.
Great to chat to you.
Thanks, Ed.